Hello, everyone. This is Chris Fleming with KFP Investors. Welcome to another lender chat. This is my good friend Ben Daniel with Clear Edge Lending. He is one of my favorite wholesale lending account executives, and I would love for you to hear what he has to share with us. But first, let's get the disclaimer out of the way. KFP Investors LLC does not give legal, tax, economic, or investment advice. KFP Investors LLC disclaims all liability for the action or inaction taken or not taken as a result of communications from or to its employees, contractors, clients, prospective clients, or participants. Each person should consult their own counsel, accountant, and other advisors to legal, tax, economic, investment, and related matters. All right. Got the hard part over with now, Ben.
All right.
Um,
Good.
well, Ben, thank you so much for agreeing to join me and share your wisdom and knowledge with us and the folks who subscribe to our little podcast here. Tell us a little bit about yourself and how did you get into real estate?
Well, first, let me just thank you for having me, and thanks for the kind words. You're too kind. But a little bit about myself. I'm currently 52 years old. So I started in the finance industry when I was 20, probably just turning 20. So started doing small loans. We did some real estate back then. Mostly they were personal loans and car loans and things of that nature. But kind of grew up in my 20s in that industry, and met a lot of people, made a lot of contacts, a lot of colleagues, and some who migrated eventually into wholesale mortgage, which is where I went around 2001. We basically, I knew nothing about it, just like most people at the time. I just knew I had friends that were doing it and they were doing well, and knew that it fit them well, and we kind of cut from the same cloth and was looking for something new. And so anyway, I joined a company called First Franklin back in those days, and worked with a few people that I'm here with at Clear Edge with now. So just made some lifelong friends, lifelong connections in the industry, and kind of stayed around it. Me personally, obviously, I've owned homes, I've bought rental property, I've purchased land to develop, I've developed some land, I've built some spec homes over time, and bought and sold land, whatever. But never really consider myself I guess a buyer and holder of rental property. I was more of came at it from a speculation perspective. Looking back on it, I wish I'd have held more, honestly. I wish I'd have held on to more than but that just wasn't in the cards, I guess. I don't know. Just, you never know. Hindsight's 2020, right?
Right.
But currently, like you said, I'm with Clear Edge Lending, and we are a wholesale lender. For those of you who don't know that term, and I get it all the time because I tell people I'm a wholesale lender, and they're like, what does that mean? Well, it basically means I do not deal directly with the public or the consumer or the borrower. I use partners like yourself. We call them third-party originators, or the industry does. And I like to call them my lending partners. I really believe in working with people that I trust, that I can count on, and be a true partner in their business to help them grow, and we grow at the same time. So, but what Clear Edge, basically our role is in the industry, is to create products, programs that fill a void. Maybe we do a lot of non-QM loans, which basically means they're not going to qualify for your conventional Fannie, Freddie, or government VA or FHA loans. So these are still great borrowers, great loans that they need a home. So we kind of fill that void and creating the programs that they'll fit into. And let's just say that it's a bucket, it's a box, whatever you want to call it, right? We've got to put them somewhere. So what we do is we trust that we can provide the right products for you as an originator to meet a need in your market, right? So anytime there is a need, and you know what those are, right? Mm-hmm. Not everybody wants to go to a local bank and be stuck with a balloon note every 2 years, right? So we offer those products to where you can do a long-term loan, fixed rate or ARM, whatever you decide to do, but it's long-term. It's not going to change in 2 years. We're not going to call you in and say, hey, we don't have an appetite for this anymore. How about refinancing and paying us off? So that's where I believe our originators really make a difference in local markets. Is you're really creating an avenue opposed to that I believe hands down beats it every day. I mean, I wouldn't, if I had the alternative of going long term, I wouldn't want a balloon. Would you agree with that?
Absolutely. Yeah. I also wouldn't want the risk of, like you said, the bank decides that they're over leveraged in investment real estate. And so when it comes time to renew, suddenly they don't want my loan anymore.
Right. Unfortunately, I can speak from experience, been there, done that. And it's painful. It can be very painful, and it can be a very overwhelming challenge trying to run around and find a new lender at that time. Yes. So it's very, very tricky, especially when you've got skin in the game, right? Mm-hmm. You've got a lot of money down in properties, and yet the bank decides to go in a different direction of no fault of your own. Never miss a payment or whatever. It's just about what's going on with the bank, right? And what they need to do with their assets. We'll get into some of that, how that money moves around in a second, I guess. But to give you just an overview, like I said, we use our third-party originators to bring us the borrowers, and we underwrite those files. We do the due diligence. We make sure that they qualify for what our investors want to see. We need to dot all the I's, cross all the T's, make sure appraisals are done properly, make sure the value's there on the property, income is in line with what we've been told, if that's the program that we're looking at, or that the property actually cash flows and pays for itself. And in your case, you do a lot of those, right, for investors. So we have to do a lot of due diligence to make sure this is a quality product that we're delivering to our end investor, right? So with that being said, I mean, we set those qualifications. We constantly look for ways to improve those while maintaining the quality and still offering more innovative products to the market. So, what we try to offer you as an originator is a commitment that we're going to continue to try to find ways of keeping you competitive, whether it be price or product or whatever it is. And in turn, all we ask is that you do your part, right? And deliver those quality loans so that we can all grow together, and you can provide a service to your community like nobody else. So
I would state too, I introduced you as one of my favorite wholesale account executives because you are very experienced and knowledgeable. You are also very resourceful. If there's a problem, I know while you might not have a solution, I know that if there's a solution, you'll find it.
You try. You definitely try. I mean, even though we're disconnected from the bar somewhat, we still know there's a borrower there who's trying to.
Right.
We still want to make sure we service through our relationship that we're doing what's right by your borrower. We want to make sure as if it's our own, because it is. It is. This is truly, I believe we're in this together, or it wouldn't work. And so if we don't approach our business that way, then I just don't think it's worth doing, in my opinion. I mean, if I can't work with people that I enjoy working with, and then it's not going to work for me personally. So,
well, I'll try to find you some people you enjoy working with. Sorry about that.
No, you're good. You're good. You're good.
The other thing I really appreciate about you is your process.
Yeah.
Everything is clearly communicated. You all are quick with your turnaround. You are clear with your communication. I don't ever have to wonder what is going on and when is it going on. Your underwriting makes sense. I've never looked at one of your, underwriting approval conditions and thought, were these people a barista at Starbucks yesterday? What is going on here? I don't know if you know, but I was an underwriter for a bank before I moved
Yeah, you told
into
me.
the mortgage brokerage. So there are sometimes, that I look at underwriting conditions and I go, this is not real. What are you doing right now? Um, so I definitely appreciate the efficiency, the communication, and you guys are one of our easiest and fastest uh, closing lenders, and I always like that. I'll be honest, I always start with you first. No offense to any of my other lenders who are listening. I always start with ClearEdge first because of the communication and the efficiency and the timeliness. And if for some reason the loan doesn't fit with ClearEdge, because y'all are on the more conservative side. Uh, so if for whatever reason the loan doesn't fit with ClearEdge, then that's when I start looking outside of ClearEdge. But that's always my starting point because the communication is great and the resourcefulness is top notch.
Well, I'm glad to hear that. And that's not all me, obviously. We've got a team of
Mhm.
people behind us, very experienced underwriters, 20 plus years experience in the business. A lot of it in the non-QM space, which is a big difference. I mean,
Mm.
even though
Yes,
they're mortgage loans, they're not all the same.
right.
Uh, Not every underwriter if you're a government underwriter, God bless you. You're doing FHA, VA. You've learned that trade, but you would probably admit that non-QM is going to have a learning curve to it, just as if a
Yes,
non-QM lender goes and tries to do something else. So to see
yes.
lenders try to mix those two efficiently without departmentalizing it would probably be a huge challenge. But for us, we what I like about it, I'm just a common sense kind of person, and I do believe, even though sometimes our loans don't quite fit exactly
Mhm.
where we would want them to in terms of the guidelines, it's we do take a common sense approach and saying, well, but yet we've got these compensating factors, and we can kind of lighten up a little bit here, and because this loan makes sense and it's a good loan, it makes sense for the investor, and so we're able to do those things. I think just and that's rooted out of the experience in the industry.
Mhm. Mhm.
And then everybody at ClearEdge that I work with is really responsive, like you said.
Mhm.
We um, we do try to put the customer first. It's not a
Mhm.
cliche to us. It means
Mhm.
all the world to know that we're doing everything we can to make sure
Mhm.
your business is growing, your customers are taken care of, they're meeting their closing times, that kind of thing. And like you said, I'd be remiss to say we don't do everything. So we may
Mhm.
be a little conservative in some areas, and that's okay. That's our
Yep,
lane, right? But and if something is,
absolutely.
and you'll know, and you can attest to this, if you'll get a call from me sometimes, and I say, Chris, we can't get this done, but it's going to be early. I'm going to
Yes.
let you know early so that you can go and do what you need to do to get the deal done. So I'd rather run straight into the fire and deal with the problem
Mhm.
than to kick the can down the road only to end up in the same place, right? So
And it does make such a huge difference to our clients' experience to have lenders who will, let's don't think about it for a week before we say no. If we're gonna say no, let's go on and say no.
right,
That makes a huge and the common sense underwriting. I love that you mentioned compensating factors. I sometimes discuss that with clients like, okay, well, we have this issue on this file, so we need to find some compensating factors. And I
Right.
refer to it as thickening the file. How can we make the file's a little thin right now? Let's thicken it so that there's some substance there to give the underwriter a level of comfort that they're making the right decision.
Yeah, and I'm glad you brought that up because I was sitting here thinking I get calls a lot of times, and this may help some originators out there. If you call an AE, whether it's me or anyone else, start with the problem.
Hmm.
Don't start with that. Don't let us end up there. Yeah, this is a great. Give me all the bullet points, the great points first, and then I say, oh yeah, this will work. Well, they just bought the house 2 months ago. And we find that out after hours and hours of trying to pre-qualify someone. Just start with what the issue is and go ahead and address that, and then build your compensating factors. You see what I'm saying? You already have the
Yes.
information. So if
Yeah.
you already have the information, just share that information up front. What is it that you're trying to overcome? What are your main concerns? And let's go ahead and address those. And it may not even be a concern.
Yeah. Yeah.
So it may be a concern for some and not others, other lenders. So, but anyway, I thought I'd throw that in because it would be helpful. I think it'd save everybody a lot of time.
Yes. So, one question I am often asked as a mortgage broker, people ask me, so where does the money come from? Then where does the money come from?
Well, we're owned by a company called SG Capital, Shelter Growth Capital Partners, and this company was formed in, I believe it was 2014, by a group of gentlemen. Years of industry experience, some of the major investment firms like Goldman Sachs and those guys. But anyway, you would eventually the company would start by bringing on investors who wanted to invest in mortgage-backed securities or whatever. So you kind of get the investors in. You have a pool of money that you're going to lend out, right? And just with any other bank, banks are taking in deposits, they're taking in investments, right? So you have that kind of dynamic going on all across the industry, no matter where you go. So you start with your own money, let's just say, kind of break this down a little bit, simplify it a little bit. You start with your own money and you lend that out. Eventually you're going to run out, right? So the industry has what they call securitization, which you essentially just pool loans. You'll take, say, a pool of 100 loans or 1,000 loans, or it may be 10,000 loans. But each loan would have different qualifications, right? So you want to try to departmentalize those or put those in buckets so they're easily identified. Let's just say the loans in this pool have credit scores of 700 to 740, and their loan to values are below 70%. And then you may have some over here that have scores from 740 to 800, and their loan to values are 80 to 90%, whatever it is. So you want to be, the investors want to be able to easily identify what is in this pool, right?
Mm-hmm.
So, but being able to, and you can Google the securitization, and it kind of breaks it. I mean, Investopedia, I think it is, has a great breakdown of what securitization really means. But what you want to do by pooling loans is you diversify the risk. So an investor is not just buying one loan, and that one loan may default and then they lose out, right? Or they lose money, they would essentially end up with property, but they're still not going to make the money they anticipated to make, which is essentially the interest on the loan, right? But by pooling those, you spread out your risk as an investor.
Mm-hmm.
So when loans are pooled and put in securitizations, they are turned into, say, bonds with mortgage-backed securities, and then investors will actually bid on those pools of loans.
Mm-hmm.
The idea for us as an originator, I guess you'd say, or someone who is pooling those loans or taking those loans to securitization, you want to at least be able to get you want to make a profit on that sale of those pools.
Right.
Sometimes in recent months, we've seen people go to a sale and have to take less than par for a pool of loans. And what happens in those cases is just like in the bond market when
Uh-oh. You were talking about having to take less than par on a sale.
Yeah, we see it all the time where you have someone going to market with a pool of loans and the appetite from the investor community is just not there for the loans at that coupon rate, right? Let's say we booked some loans back months ago in the 4s and 5s, and now current rates are in the 6s and 7s. The investors are like, well, why don't I just wait for the 6s and 7s, right? I want the higher
Sure.
coupon rate. Or
Yeah.
they'll go ahead and pay you for the lower coupon rate, but they're not going to pay you a premium.
Right.
So you end up letting the loan go for a wash, or you end up taking a loss so that you can start over, not necessarily start over again, but you've got to have that liquidity going on in your business to keep lending out money.
Right.
And that's the way it's been for decades now. And when you hear the word liquidity, or we have a liquidity crisis or whatever going on, that's just basically the money flow is kind of frozen for a period of time.
Yeah.
And
There's a bottleneck.
Investors aren't moving the money around in a fashion that makes it worthwhile to keep putting it out there. So it could create issues. But at the end of the day, it works really well. Otherwise, we would be back in the Stone Age with all the banks controlling all the loans, and you take it or leave it approach to lending. Take the terms we have, or leave it. And now it's not that way. It allows us to offer a lot of different competing programs for borrowers. It gives so many more options for borrowers to obtain a loan that they need that fits them, that fits their circumstance.
I'm so glad you brought that up, because I think that a lot of borrowers are very accustomed to conventional loans and bank loans. And I regularly get phone calls or emails from folks who say, well, tell me what kind of products you offer, or, tell me about your 30-year loan. Well, honestly, we have so many different ways to customize it. It's
Right.
easier to tell you what we don't do than it is
Yeah.
to tell you what we do,
Right.
because there's not just one program and one way to fit the box, and this is how it works or it doesn't.
Yeah.
There are tons of customization. So,
I agree, and it really starts with what they need. What are they
exactly.
trying to accomplish?
Right.
Well, I want to be a real estate investor, but I really don't have any experience. Well, that's still doable. You're going to need some money. You're going to need to
Yep.
bring some. If you're an investor, you're going to need to have some money to invest, right? That's by definition what that means. It's not
Uh-huh.
all, 100%. The bank's not just going to give you the 100%. I mean, I hear guys on the internet all the time, buy your first rental property with no money down and all this kind of stuff. And I don't know, maybe there's some way to do that, but I don't know what it is. And I've been in the business a long time, but you're better off to be disciplined and come to the table with your part, to get started, and then
I
go from there.
I've been known to tell folks, especially more frequently lately, that a lot of the so-called gurus are really making their money by teaching you some strategy,
Right.
not by using the strategy themselves.
Right.
And
Exactly.
so, yeah, they're selling their curriculum or their program or their whatever it is, and that's how they're making their money.
Yeah, that is
So
funny that you got so rich on the way you did it that you just tired of getting rich and you want to go do a class every other week somewhere. That doesn't
right.
make any sense to me. I keep
Which
doing
is
what I
not
was
to say
doing.
Yeah, that's not to say that there are not some valid courses. I went to one in California in February. I'm going to one in Ohio in April. There are some really great minds who love to share their knowledge and wisdom, and there are some very valid courses. But I just encourage people to examine their source. How is the person who is selling you this curriculum, how are they making their money? Are they still doing what they're telling you to do? Or are they just telling you what to do? So that's
Yeah, I agree.
yeah.
Do your
Um
homework for sure.
yes, buyer beware. So what are you currently working on that would be a benefit to our investors, or what developments do you see coming that we should know about? Tell us about the future in whatever
Well,
fashion you see fit.
it's so I appreciate that question because I believe we're at a place right now. Everybody knows that rates have gone up at breakneck speed, right? Even some banks
Another
didn't
quarter
have
point
time.
today.
Yeah,
Hmm.
yeah. Banks didn't have a chance to react to some of the movement even in the bond market, which is so, like I
Hmm.
said, breakneck speed. So with that being said, though, with investment property, you've heard the buzz. It's, the affordability is an issue, right?
Hmm.
For first time home buyers, people of that nature who are trying to get in the market. Now prices are high, rates are high, and they're on the sidelines. So there's still opportunity for investors to provide them housing. And
Hmm.
so if you are an investor and you have the wherewithal to buy more properties, I would not sit on the sidelines right now, and because you have an audience, you have a consumer waiting for your product. They're there,
Yeah,
and they're going to need you. So you can definitely get in the game and make a difference. One of the things we saw in terms of a change, I guess we're seeing really, and this has been an ongoing thing for a while, is short-term rental. It's become more and more popular, especially in certain destination areas. But even some places where you wouldn't think. I mean, there's still short-term rentals that are happening. So we've rolled out our option for using short-term rental income to qualify for the investment property loans. These are business purpose loans, and we can use the short term rental uh, for qualification. Whereas before we had to, even though your desire may have been to do a long short term, we would still look at a long term tenancy qualification process, if that makes sense. So that's exciting
that's
for us.
huge.
Yeah, we've been waiting on that for a while because we see the demand day after day, and we know it's there. So we're really excited about that and bringing that to market. So, and again, we're just going to continue to do things like that to make sense. They fit the demand. There's a demand for it, and we'll continue to try to grow that.
I'm excited about that. We actually, here at KFP Investors, keep a list of lenders who allow us to use air DNA projections as opposed to long term rentals for cash flow calculation. So, um, yeah, I'm thrilled to be able to add you to that list. I love what you said about not sitting on the sidelines. I heard a great statement the other day, and I'm sure it wasn't original, but it really struck a chord with me, and I've kind of just saved onto that as a little pearl of wisdom and knowledge, and that is time in the market is more important than timing the market.
Absolutely,
Yep. Um,
absolutely,
Yeah. Think of all the lost opportunity by waiting to see what's going to happen. And by the
right.
time you figure out what's going to happen, it's because everybody else has already responded to it. That's how you get the results. It's always looking backward, and there's a delay in the information. So yeah, in the market is more important than timing the market. I appreciate
Right.
that. So, if
Right.
you could give three pieces of advice to your younger self regarding investment real estate, ideally, but the topic is wide open. Three pieces of advice to your younger self. What would those be?
I guess this is probably going to be a more of a broad brush thing. I mean, it's going to be kind of applied to, I read the question and I pondered on it for a little while, but, uh, and I have a young son, so it's kind of easy for me maybe to say what I've told him, you definitely want to pass along the lessons that you've learned the hard way. And
Yes,
those are things. So even though we just said don't sit on the sidelines, that doesn't mean you shouldn't be patient.
agreed.
And what I mean by that is, I don't mean be paralyzed by overanalyzing everything, but don't chase the crowd or don't chase the shiny object thinking you're going to miss an opportunity. Make sure you do your due diligence, that you're ready, right? And that you feel good about it. You're not, it's the right thing to do. I've made some mistakes along the way where I knew in my gut I was being too anxious. I was trying to force something to happen, and it ended up my gut feeling ended up being right.
Hmm.
Um, I don't know all the opportunities I've lost though, honestly. So doesn't really matter. But the other one is to be consistently disciplined, and that's the hard one. I heard
Yeah.
somebody say, this is not original, I'm sure, but motivation is only going to get you so far.
Uh huh.
Motivation is great, but if you don't have the discipline to do the things that you don't like to do on a consistent basis, let's say it's cold calling or whatever it is, then success it's gonna be hard for you. So you
Yeah.
have to be disciplined with what you want to do, and that's true in every aspect of life.
Yeah.
It's true with what we eat, how we exercise, everything. But we have to be consistent with that. And then the other thing I would say to my younger self, and I say to my son, is start now. While you're young, you have time. And you mentioned time in the market as opposed to timing the market. When you have time on your side, you don't have to worry about timing.
Hmm.
You can invest consistently, often, put it on autopilot these days. It just goes directly into wherever it is, whether it's your IRA, 401k, whatever it is, whether you're putting aside money to make your first real estate investment, do that early, do it consistently, and don't waver. Don't let that new car knock you off your investment goals, right?
Yes.
Stay true to what you want to do. If you want to set a goal to retire at 50, it's doable, very doable.
Right.
But you've got to stay on course with what you decide you want to do. And it doesn't
Hmm.
take all your money, it doesn't take your entire paycheck, whatever it is. It's just whatever you can put aside, do it and do it consistently. And then, like
Yes.
I said, you don't have to worry about timing. It'll work
Right.
itself
Right.
out. So, yeah, those are the three things I think, lessons that I've learned, I guess you'd say,
Mhm.
is I haven't always been patient. I haven't always been disciplined, and I'm not as disciplined now as I'd like to be. But but yeah, and it's too late for me to start young. So,
Yeah.
uh,
Speaking of disciplined, my our 11-year-old daughter really impressed me this morning. I'm driving her to school every morning, and she's got her little cell phone out, and she's using this app called Duolingo to learn three languages right now. I know that she's working on Hawaiian, Spanish, and I don't even remember what the third one is. But she did her. We were having a conversation. She said, "Hang on, I've got to do my Duolingo this morning." And so she's in the car and she's doing what she needs to do. And she goes, "Oh, I got 100%." And I said, "Well, I'm not surprised. You've been you've been working at it for quite a while. She said, yeah, I have 125 days, consecutive days. Um,
Wow,
and I said to her, I don't think I've
that's
done
great.
anything for 125 consecutive days in my life other than eat and breathe. I,
Yeah,
I'm
yeah,
so impressed by that.
that is very impressive. That is very
Yeah.
impressive. She's developed a habit at that point, right? It's
Yeah. Yeah.
yeah, that's
Uh,
good.
yeah.
I
I
can't
was
say
very
enough
impressed by
about the
that.
language. The language thing is, and that may be something I would add to the list for my younger self is learn another language,
Yeah.
one that's going to benefit you in business because it's definitely necessary. Um,
Yes.
yeah, as you know, we went on a cruise last week, my wife's 50th birthday, and we said it to ourselves. Why didn't we learn to speak another language?
Mhm.
We could communicate
Mhm.
so much better with more people and that kind of thing. So yeah, my hat's off to her for doing that. And the
Yeah.
younger the better. They say to learn a language, you start young is it's so much easier than trying to do it when you're older.
Yeah. Yeah. Well, I don't think we better give up, but yeah, to that same, start young, don't worry about timing, or start as soon as you can, even if you're older. Don't worry
Yeah,
about timing, worry about
right.
time. That goes back to that. The best time to plant a tree was 20 years ago. The second best time is today.
That's right.
Uh,
Right.
yeah. Well,
Gotcha.
very good. Well, Ben, what what can we in our network do to help you? Is there any way that we could be a resource to you other than everybody coming to KFP Investors to finance investment real estate?
Yeah, yeah, that for sure. We need that. Other than that, I mean, obviously we have a big industry. Other
Mhm.
people who may own a company like yourself, or you may know other originators who work elsewhere. I'm constantly looking for new partners that I can trust.
Mhm. Mhm.
Same goes back to what I originally said. We want to partner with people that we can trust to do business with. That's me personally and what I like
Mhm.
to do. So I'm not asking anybody to screen anyone. I'm just saying if you have a referral partner and you think they're looking for a lender such as Clear Edge, then by all means share my contact information. Other than that, just like I said, lean on me for whatever I can do to help you. And
Sure.
I'd love to answer any questions. Um, we didn't touch hardly on any product or anything like that, but we've got a quite a menu of products from short-term loans for rehab, bridge loans, that kind of thing, to long-term investment property loans, to primary, secondary, whatever you want to do there. But if other originators do those, so
Yeah.
just yeah, like I said, lean on me if you need something, and I'm always here.
Well, thank you so much. I really appreciate you having this conversation with me today, and we'll get this uploaded and share it with you. Before we go, I do want to remind everyone that once a month, we do have our live lender chat event. This obviously is a recording, but our live lender chat, let me tell you when the next date is in April, should be 1, 2, 3, should be April the 20th, would be our next live lender chat event. If you are subscribed to our newsletter, you will receive a reminder and a link. If you are not subscribed to our newsletter, please email contact@kfpinvestorsllc.com. We'll get you subscribed to the newsletter. But one of the things that we do in our live lender chat is we do a book review. And so this is the book that I am currently reading. Kimber, one of our originators, likes to call it my book report section. Um, Guys, if you haven't bought this book, so far, this is pure gold right here. So I encourage you to read it. I'll be giving a full review on our live lender chat, and one participant will win a copy from us, and we'll ship that to you. So look forward to talking to everybody. If you have any questions, comments, concerns about your investment real estate endeavors, we would love to talk about it. Reach out to us anytime, kfpinvestorsllc.com. Thanks so much.